In the volatile markets that we have right now, you're probably wondering, how can you make money on the buy side in individual stocks? Well, that's what I'm going to show you in this week's Market Minutes. Plus, I'll do my normal market analysis and we'll look at the trade of the week. It's all coming up. All right, so let's talk about a strategy for making money in this market. What we have to do is find stocks that disconnect from the overall market movement. I call those alpha stocks, and it's because they are the leaders of the pack. They're moving on their own story. They're characterized by abnormal trading activity, abnormal price gain, and very abnormal volume. Now, I created an indicator many years ago to find these stocks, and it's very simple. It looks for statistically significant abnormal price action. I'm going to show you 3 examples from this past week, stocks that made considerable gains, and they all started with this indicator. Now, here's the thing. Most stocks that beat the market will have an action candle very early in the upward trend. However, not all action candles lead to market beating trends. So we have to have a way to identify the action candles that are the best trading opportunities. And the key in that regard is to find action candles that are breaking from predictive patterns. Now, predictive patterns are characterized by breaks from low price volatility. Let's look at some examples because it will be a lot easier to understand. So here's a stock that was a big gainer this week. Everywhere that you see a pink and yellow dot, so not just the pink dots, but the pink and yellow dots, so there, a couple up here, those are all action candles. But there's only one that really matters, and that's this one right here, because this is the stock that was breaking from low price volatility. You can see that coming into that action candle, nobody really cared about this stock. It was boring. And then something made the buyers get aggressive. They bought the stock aggressively on the 13-minute interval, making an action candle. You can see the volume was abnormal, and the result is the stock went up more than 100% over the next 2 days. Let's look at another example. And these are all swing trades using the 13-minute interval. Now, you're probably wondering why the 13-minute interval? Well, I like the symmetry of the fact that there are 30 13-minute candles in a trading day. The trading day has 6.5 hours, and that means 30 13-minute bars. I just love the symmetry of it, and I've always done it that way. All right, here's another one. So look at the action candles. There's actually a few entries on this chart that were good. The first one, probably see right there, that's the action candle, pink and yellow dot, breaking from low volatility, breaking through resistance from low volatility. And that led to the first big move back on April 21st. We then had another one right here. You see low volatility, which is another way to say sideways trading, but not a lot of price movement, and that started another move. And then we had one more here, low volatility, sideways trading for a little bit of a move out of there. And then finally, this one right here, which led to a quicker run. Now, you could have just bought this and held it all the way until it hit resistance where we expect it to get stuck. These are all concepts that I teach in the Active Trader course that you can get from Stockscores.com. If you have any questions about that, just go to the website and then you can email me from the website. All right, let's look at one more example. This was one of the great hot stocks of the week. And again, low volatility, and you can see obviously that there is an abnormal price move and abnormal volume. Now, if you were watching this stock at that time, you wouldn't need my indicator. You just look at that chart and say, well, that's pretty abnormal, and it's breaking from low volatility. The benefit of this action candle indicator is that I can scan the entire market looking for them. Using this indicator with a program called TradeStation, which I have no affiliation with, but it's what I use, I've programmed this indicator into that platform to look for statistically significant abnormal price, abnormal volume, and then when I see one, well, the computer will identify it, I then check the chart to see if it's breaking from low volatility. There's the result. This stock was at $12, $13 and went all the way up to $35 in 2 days. Those are the kinds of trades that are working really well in this market, and it's all about finding alpha, finding the stocks that are trading on their own story that can make those big jumps because they attract a crowd. And oftentimes these stocks don't have very many shares outstanding. They might only have 1-2 million shares available to trade. But because there's some catalyst that makes the buyers come in aggressively, some positive news, perhaps a positive rumor, you could get 100 million shares of buying on a stock that has 2 million shares available to buy. That's why these stocks can move 100, 200, 500%. We see some that move over 1,000% in just a few days. And there's some of these stocks pretty much every day. It's all about finding alpha. All right, so every week we do an analysis of the market, and of course it's particularly timely right now because there's lots of volatility, and I know many of you wondering what's happening with the market. So I do this every week. Make sure you're subscribed to the channel. It's free, and I will do these updates for you each and every week. All right, let's start with a look at the S&P 500 chart. And you can see that we've recovered nicely over the past week. Do that in blue there. Decent gains, and most importantly, we've built a rising bottom. I've been talking about this for the last few weeks. We want to see a break of this downward trend line from a rising bottom, and we're just doing that on Friday. Now, I have a bit of an issue with this because there's still a lot of volatility into that break of trend, and so I think that there's still a decent chance that the market can pull back. I think at this point you could start to nibble on a few bottom fishing opportunities, try to buy a few bargains, but keep some cash because again, there's a good chance we'll get another little pullback, a little bit more of a compression of volatility, and then a move to the upside. That volatility is more obvious when we look at the 1 month chart. This is a chart of 60-minute candles. So each one of these bars represents 60 minutes. And so this is Friday, and then of course over the last month going back. Well, there's an important pattern building here. We've got rising bottoms, which is a sign of optimism. We have this line of resistance here, which is the upper boundary of what investors are willing to pay for the market. We need to break through that, but realize that we've still got this resistance here that's going to slow it down. I would like it better if the market made a little pullback and then made another little stab at breaking that, building a stronger foundation. So again, I think it's early in this reversal. I think you could take a nibble on some of those big name stocks that have really been beat up, but don't get too aggressive just yet because I think there is still a fair amount of uncertainty. Let's move to the NASDAQ, which has underperformed the S&P 500, but it has been able to better break that downward trend line this week. There's the rising bottom. We love to see that. The break of the downward trend was on Thursday. It should move up into here, probably get stuck, then make a little pullback. It's going to be a slow grind higher, but if the headlines around trade tariffs and those sorts of issues continue to be a little more positive, I think you'll see the NASDAQ start to run. And again, take small nibbles here and there, try to buy stocks on pullbacks, don't chase strength, make sure there's rising bottoms because that is a sign of optimism. All right, moving along to the Russell 2000. This is much more interest rate sensitive, these small cap stocks. We're going to look at the interest rate chart near the end of the video here, so stick around for that. But we still haven't broken the downward trend yet. We've got a little bit of a rising bottom. That's okay. I'd like to see it kind of quiet down and then break. And I think key to that happening will be for the bond market to start to move higher, which means interest rates move lower. Moving along, let's take a look at the Canadian market. T.XIU is the symbol for the TSX 60. It didn't go down as much as the US markets, and it's come back quite nicely, but it has not yet broken the downward trend line. I think this starts to pull back. There's a very good reason why, and that is the chart of gold. Now, gold has been the hot market through this correction that we've had in the overall stock market. Gold has been the place to be. And I've had a bullish rating on gold for some time, but I have to tell you, I'm a little concerned, and here's why. I love markets that are in linear upward trends, but this is going from linear to parabolic. See how it's curving up and away, and this week it broke that parabolic trend? That's a very good sign that at a minimum, it's going to pull back to that trend line. Not certainly, but quite likely. If we look at the 3-year weekly chart, you can see it even better. You see how the trend was linear and it just gets steeper and steeper and steeper. That's a sign of emotion. That's what happens when buyers are chasing price higher. And on this week, this red candle here that hits a new high, that has very strong volume, I call that a bursting bubble candle. It's a bubble in this market that is likely going to pop, and I think gold pulls back down to here, which will be negative for the Canadian market because there's a lot of mining stocks on the Canadian exchange. All right, We haven't really made the big breakdown yet, so don't get too worried about it, but definitely watch this week for profit taking in those gold miners. What about oil? Oil is also an important market for Canada and the Canadian stock market. And it's been, moving lower as concerns about how trade tariffs and trade wars have an effect on the global economy. And that's why we had this big sell-off here. It's starting to stabilize, but it's still not a healthy chart. If you look at the 3-year weekly, it's sort of at the bottom of its 2-year trading range. So there's not a lot of downside, but it's going to have to deal with this pessimism from the past 2 or 3 months of weakness before it can really get going again. If we look at the 1-month chart to get that intraday sense, you can see we're building some rising bottoms. If we start to break through here, we should move back up to this level. So traders in oil stocks could maybe take advantage of that short-term bounce back. All right, moving along to the currencies, we're going to take a look at the US dollar, which has been obviously very negative, but just like gold going parabolic to the upside, this is going parabolic to the downside. And that means that the selling is emotional, fear-based selling, and that often comes just before a reversal. Now, we don't have a sign of a reversal yet. We need to watch for that, but it is looking a little bit better if we can break this parabolic downward trend line. I want to take a look at Bitcoin because this is actually a bit of a good-looking chart right now. I've been sort of neutral on Bitcoin for the last few months because it's been stuck in this sideways range, but this week, it's breaking this little downward trend line. Now, it's not doing it from a rising bottom. However, when we look at the 3-year weekly chart, now you can see this long-term upward trend holding at the trend line, breaking the pullback, and that's a good sign that Bitcoin's going to move back up toward those all-time highs. So looking quite a bit better on Bitcoin this week. TLT is the bond market, and this has a heavy influence on the stock market, in particular the small cap stocks. It's been very volatile with the uncertainty with all the usual things that we've talked about, trade wars and such. But it's starting to stabilize, holding support. It just needs to start to build rising bottoms. And so if we look at the 1-month chart, you can see that in the very short term, it's building rising bottoms, needs to break out, and then it should go back to those highs. But in the longer term on that 3-year weekly chart, it's still not a real strong chart. It's not particularly terrible either. It's got good support, but it's just not building any sort of an upward trend. So with that then, my ratings are as follows. On US large cap, I've upped the rating a little bit on the short term to neutral, long-term neutral. NASDAQ still long-term bearish because it did break the long-term upward trend line, but short-term neutral. Sorry about the spelling mistake there. US small cap stocks neutral on both time frames. Canadian short-term bearish, a little worried about that gold market. Long-term neutral. Gold still bullish, but it's risky, and that's why I've lowered the long-term rating to neutral. Oil neutral on both time frames. US dollar bearish short-term, long-term neutral, as it is at support where it should bounce from its long-term support. Bitcoin bullish on both time frames, and bonds neutral on both time frames. All right, let's get into this week's trade of the week. This is an example of a stock that had alpha, that was a hot trader, and in this case, it's a day trade using the same principles that I talked about at the top of the video. This was a stock that we found on Friday trading abnormally. We actually found it on Thursday as well, but the difference this week is this stock actually made its buy signal in the pre-market. Now, most stocks are not worth trading in the pre-market because they're not active enough. That was not the case for OMEX. You can see here from about 8 o'clock onward, it was very liquid and abnormal. It made a move up, a pullback, and a break of a pullback. There's a little blue dot there. That's another one of my custom indicators. I call it a wave up indicator. And it was the buy point for this particular stock with a buy point there and support for the stop loss there. And it ended up earning 1, 2, 3, 4 times risk. So if you're risking, and probably a sell signal at 3 times risk. So with $1,000 of risk, it's a $3,000 profit, all before most of the people had even started trading the stock market, because this was a pre-market mover. Well, hope you've enjoyed this week's Market Minutes video. A reminder, at Stockscores.com, my website, there is a free weekly newsletter by email that you can register for. So go to Stockscores.com, check that out. It's on the homepage. Make sure you're subscribed to this channel. If you like this video, click on the like button. And as always, trade well.